Broadcom just dropped 15% after earnings. NVDA is sitting at around 10% below its all-time highs. Two of the biggest AI semiconductor names, both beaten down. But which one is actually the better buy right now? Let's look at the data. Both companies are at the heart of the AI build-out. NVIDIA makes the GPU racks that train and run AI models. It's the picks and shovels of the AI gold rush. Broadcom makes custom AI chips called ASICs for hyperscalers such as Google and Meta. Plus, it owns VMware. Very different models, same macro tailwind. Let's start with forward price to earnings, the ratio that measures what you are paying for next year's earnings. NVIDIA is in the low 20s, Broadcom in the low to mid 30s. That's roughly 40% more expensive for Broadcom. Now, remember, AVGO just dropped 15%. Even after that sell-off, NVIDIA is significantly cheaper on this metric. But forward price to earnings alone does not account for growth rate. This is where PEG ratio comes in. Price to earnings growth ratio. It divides price to earnings by the growth rate. Below 1 is generally considered very good. Below 0.5 is exceptional. NVIDIA's PEG ratio is right below 0.5 and Broadcom is around 0.75. You are paying almost half the price per unit of growth with NVIDIA. Here is what makes the NVIDIA setup really compelling though. NVIDIA is currently trading at around 39% below its 10-year average price to earnings ratio. Broadcom's trailing PE is around 84% above its 9-year average, even after the drop. One stock has already gone through its compression, the other has not. Now let's look at the quality of the businesses. NVIDIA has 74% gross profit margins. Return on invested capital is 104%. That means that for every single dollar invested in the business, it generates $1.04 back. Broadcom has 66% gross profit margin and 21% return on invested capital. Both are great businesses, but NVIDIA's economics are simply extraordinary. In terms of revenue, NVIDIA is leading the charge, growing at an explosive 85% year over year. Broadcom follows with a still impressive 48% year over year expansion, proving that NVIDIA is expanding at a much faster velocity despite scaling on an already massive financial baseline. NVIDIA is on track for a run rate of well above $300 billion annualized, and Broadcom has officially guided for around $110 billion. And what do the analysts think? Because the average price target for NVIDIA is 309. That's roughly 50% upside from here. Broadcom has a 503 target, which has around 30% upside. Both have strong buy ratings across the street, of course, but NVIDIA has more room to run even on the consensus view. So which one do I think is the better buy right now? On every single valuation metric, forward price to earnings growth ratio, trailing price to earnings versus historical average gross profit margin, return on invested capital, analyst upside, NVIDIA wins. It's cheaper, faster growing, higher margin, and further below its own historic valuation. The setup looks very similar on how ServiceNow looked at 90. Quality company, already taken the pain, thesis intact.